Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today we are going to go through the technical analysis of Bitcoin. There are a few things to update you with. Nothing much has changed, but there are some things to update you with, of course. And we're going to talk about what is happening tomorrow as well. And sort of what's happening for the rest of the week as well, because there are some big events that are going to be happening that are going to affect the price of the traditional markets and the crypto markets as well. Going to take a look at the DXY as well, because that is going to affect what happens with the crypto and the traditional market as well. So if that sounds interesting, then please make sure you smash a like on this video. I really appreciate it. Really helps me out, really helps the channel out, and I can continue to bring the trades I bring you and the content I bring you as well. So please make sure you smash that like button, and we'll get straight on into the video. So taking a look at the Bitcoin chart. So we're looking here at the Bitcoin 3-hour chart, and what we can see is that Bitcoin is still initially respecting this ascending parallel channel. As we can see, we've had a number of touches of the resistance up here and a number of touches of the support down here. And as of last night, you can see that we did test it actually a few times. And today we are seeing a nice little bounce towards the upside off of this support level. And the reason being why we are seeing this is because this morning we are seeing that DXY have a slight pullback, but initially the DXY right now is actually holding support at this major support level here and having a slight bounce towards the upside, which is actually not very good for the traditional market and the crypto market. We want to see the DXY break towards the downside here. And if it does break towards the downside, then we can actually start seeing Bitcoin and the rest of the crypto market continuing this push towards the upside. However, if we're going to see the DXY hold the support and bounce towards the upside, this is not going to be good for Bitcoin and traditional market and the rest of crypto, because we're most likely going to see Bitcoin break the support here. If we break the support here, then the next levels that we are looking at is sort of $21,468 would be that next target that I would have for Bitcoin, which is that sort of next major support. It's been previous resistance, as you can see here, and then going all the way back to was it November? Yes, November. So the 5th of November. Okay, that's when we tested it first as resistance, got rejected from it. Okay, and then we used it previously as major resistance here before the break towards the upside. So of course, it's going to act as support if we do come down. But right now, it looks good for Bitcoin. It looks like we're bouncing off of this level right now. Okay, if we bring up the RSI, we can actually see that we are getting a bullish divergence coming in as well. So we're seeing higher highs on the price action charts, but lower lows on the RSI. So we're hitting bullish divergence, which, is good. I possibly could have been looking to enter a trade here. However, there just wasn't enough confluence for me. I'd like to see more of a horizontal level coming in there. I tend to look for 3 bits of confluence rather than 2. You could use 2 bits of confluence, but for me, the way I trade, I like to look for 3 bits of confluence. And all I could see was 2 bits of confluence right there. But initially, this could have been a good trade entry. And, if the price continues towards the upside, we could see the price actually come and test the resistance once again at the top of the ascending parallel channel. So we could be looking at that, but I would only expect that if the DXY was to come back down into the support level and maybe even break it towards the downside as well. So for Bitcoin to be bullish, for the rest of the markets to be bullish, we want to see this DXY break towards the downside, and then I'm sure we will have a massive, massive rally within Bitcoin. However, if we hold this support, which as of right now we are, it's not going to look good for Bitcoin. And if we do bounce, it's probably going to lead into another leg down for Bitcoin. So we do just have to be very, very aware of that. Moving on to the traditional markets quickly. So the ES, which is the S&P 500 E-mini futures, what we can see here is that this is actually having a slight rejection from this horizontal level here at $4,091. So this isn't going to be good for Bitcoin as well. We know that the crypto market Bitcoin does follow the traditional markets. So whatever the traditional markets are doing, Bitcoin does as well. So if we're going to see the traditional markets get a rejection from here and then maybe have a bigger pullback, then we could see that within Bitcoin as well. So we've got to be very, very careful here. DXY is pushing towards the upside. DXY is holding the support. That is not good for Bitcoin at all. And then we're seeing the ES actually get rejected from this resistance here. However, there is a good thing. Okay, remember, we've been talking about this downwards trending resistance level here, which over the course of 2022, the price of the ES was struggling to break above it and did not, in fact, break above it. As you can see here, we tested it multiple times. We had a wick break above it. However, we found strong resistance up here. Price came back below the downwards trending trend line and found a candle rejection from it there. But we did actually break it towards the upside on the 23rd of January. We did break it towards the upside, tested it as support, and then we got a slight bounce coming into this resistance level here. And from this resistance level, we are finding a slight rejection. But initially, because this has been major, this downwards trending resistance level here, now support, has been major resistance previously, it is going to act as support, and we could use it as support and then bounce and then finally maybe break this horizontal level here, this white horizontal level, which as of right now, we're finding it tough to break above. But then again, we have a major resistance level up here as well, sort of between 4,156 and $4,200. So we have to be aware of that as well. There is still a lot of resistances that we need to break for me to get, very bullish, and same on the DXY as well. There's this support level that we need to break for me to get bullish. As of right now, I'm still not flipping bullish. I saw someone commented on one of the videos that I was flipping bullish. I'm not flipping bullish. Yes, in the shorter term we can flip bullish, but I'm in the sort of medium to longer term, I'm not bullish as of yet. Yes, I could flip bullish if we do see these levels broken. Okay, if we see this support level getting broken towards the downside, that is a very good sign. Okay, and also if we can break this resistance level here on Bitcoin, the $25,000 level, that would be very bullish as well. So as of right now, I'm still more bearish than bullish. I've been talking about this this cheat sheet here, the Wall Street cheat sheet. I've been talking about, it looks as though we are leaving this anger phase here, coming into that depression phase, and that's lining up with the fundamentals as well. We're coming, there's a recession looming over our heads. Just to show you the example, okay, every time the 2-year exceeds the 10-year yield, okay, when this orange line goes below the black line, it leads into a recession, which is shown by these boxes here. That has happened every single time, as you can see on this chart right here. And taking a quick look at the 10-year and the 2-year yields, the US government bonds 2-year yield, you can see that the 2-year yield is at 4.195% and the 10-year is at 3.492%. Okay, so this is signaling that we are in a recession as of right. Well, we are going to be leading into a recession if we're not already in the recession right now. So we have that as well. The recession hasn't been confirmed yet, that we have been in a recession. It's not been confirmed yet. But, every single time that 2-year exceeds the 10-year, it does lead into a recession. So we do just have to be very aware of that. And if we're going to come into a recession, traditional markets are going to get crushed, which is going to feed into the crypto market as well, meaning Bitcoin is going to have another leg towards the downside, which could potentially take us down to those targets that I've been talking about previously, 14,000, 12,000, 11, maybe even 10,000. So we've got to be very aware of that. And what I was talking about a few seconds ago is that, this anger phase here is looking very similar to the chart right here, this weekly chart. Okay, so what we're seeing right now is we've formed a low here. We formed a high here, then we formed a lower low, okay, and then we're forming a lower high right here if we do continue this downwards momentum, okay? And this is exactly what has happened right here. So zooming in slightly, okay? So after coming out of that capitulation phase, we come into the anger phase, we form a low, we form a high, we form a lower low, okay, and then a lower high here, and then we slowly come into that depression phase, okay, and then once we finish that depression phase, then we go into the disbelief, okay, and it starts all over again. You go into hope, optimism, belief, thrill, and so on and so on. But right now, it looks as though we could be in this anger phase right here, and everyone's, sort of getting very bullish here, but then it starts leading into that depression phase. So we've got to be very careful with what we're doing, because it does look as though this could be a possibility. Now, this can be invalid. Okay, yes, it can be invalid. As of right now, it's looking very similar, but as I said, it can be invalid. Okay, so if we do break above this previous high here, we do break above this resistance here, then that of course is going to invalidate the theory that I have right there. So we gotta look at all the options as well. And of course, if we break the support here, then it's most on the DXY, then we're most likely going to break this resistance here. On the Bitcoin weekly chart, which would invalidate sort of this scenario that I'm looking at here, this anger scenario, which would lead into that depression scenario. But looking at the fundamentals, looking at the Fed, which I'll get onto in a moment, are still increasing the interest rates. That is not good. Yes, they've lowered the amount they're increasing by, but they're still initially increasing, which is bad. Okay, then we've also got the 2-year exceeding the 10-year, which every single time this has happened, it's led into a recession. So we've got to be very, very careful there as well. But it's not looking good on a fundamental basis and a technical basis as well. It's just not looking too good for me. But of course, things can change. If we can break these resistance levels, then it's going to, then we can start talking about us coming into this bull run once again. But as of right now, I'm still sat more bearish rather than bullish right now. And the same with Ethereum as well. Taking a quick look at Ethereum. Ethereum has actually been respecting my levels very, very well. So we've got the previous high here, which it has tested pretty much to the dollar and got rejected from. We also have this horizontal white line here, which is resistance. That's been respected very, very well as well. And then we are forming sort of these, let's have a look. Are we still forming these bearish divergences? No, we're not forming these bearish divergence. We could be forming an exaggerated bearish divergence here with equal highs here and then higher highs here. That's a possibility as well, but we're still bearish divergence right here, which was formed. Okay, but we're sort of seeing consolidation here. But Ethereum is respecting this horizontal level very well, and we're not seeing the price break above this. But of course, DXY breaks support right here, and Bitcoin breaks resistance. Then yes, we could see Ethereum break this resistance here and move much higher. So I've got to be aware of that as well. But right now, I'm still sat sort of more bearish rather than bullish right now. But as I said, I've explained the levels. I've explained on the DXY, if we break this support here, then we can start flipping bullish, okay, because Bitcoin will most likely break its resistance up here. And then we can start looking bullish. But, right now, we're looking very similar to this anger phase right here, which then leads into depression. And then we finally have that low of the bear market right there. So, we've got to be very aware of that. And looking at the other things as well. Okay, if I can zoom out a little bit here, bring up the object tree. Let's have a look at the bear market here. So we tend to have an over an 80% pullback within a bear market. Okay, so the previous bear market, the one before this one, okay, 2018, you can see that we had an 84.12% pullback from the high to the low. Okay, from the high of the bull market to the bottom of the bear market. And even the one before that as well, we had an 86.9% pullback from the high of the bull market to the bottom of the bear market. Okay, and right now we've come about 75%. Let's just have a quick look. We've come about 77, almost 78%. We've come, okay, and we tend to have over an 80%. If we come, okay, and look at sort of the average, okay. So say we've come sort of 86%, okay, on this one. We've had an 86% drawdown here, and we've had an 84% drawdown here. Okay, that gives us an average of 85%. And because we've got, because we've had these two bear markets in the past, giving us over an 80% drawdown, it's giving us quite a high chance that this bear market as well could bring us an over 80% drawdown as well. And an 85% drawdown, which would be the average, would actually bring us down to around $10,200. So we have to be aware of that. I'm not saying the price is going to come down to there, but there is a high chance. Okay, the previous bear markets have had an 80%, over an 80% drawdown. Okay, and we haven't gone over 77% yet. Okay, so yes, maybe this could have been the better bottom of the bear market, but as of right now, I'm swaying more towards the way towards the scenario that we're going to have another leg towards the downside, potentially have a slow depression phase, coming down potentially to 12,000, and then we can start that bull market. However, if we can break these resistance levels here, then of course we can start that bull market much earlier. Yeah, that's pretty much all I've got for you for the charts. Moving on quickly to daily FX, showing you what we've got in the next 7 days. Okay, we've got the Fed interest rate decision, Fed press conference after as well, non-farm payrolls, unemployment rate as well. So these are the most important things. Okay, the Fed interest rate decision, the Fed press conference, non-farm payrolls, and unemployment rate as well. Okay, these are the four most important things happening within the next 6 days. Okay, the Fed interest rate decision within the FOMC meeting. Okay, that's coming out in 1 day and 5 hours. Right now, it's looking pretty much, 99.6% of analysts think that we are going to get a 25 basis point rate hike, which, you can look at it as being good, but initially in the longer term, for me, especially, it is still very bearish, okay? Because the Fed are still increasing. Yes, they're increasing by a decreased amount, okay? So rather than 50 or 75, they're now increasing by only 25, but initially they are still increasing. So what I would expect for tomorrow, and of course, I'll try and come live for that as well. What I would expect when this decision comes out, and if it's confirmed to be a 25 basis point rate hike, then what I would expect is a pump, okay, and then a dump, okay? Because, silly money is going to be looking at it as a good thing, okay? But, the smart people will know that this is still a bad thing because they are still increasing the rates. And then it depends what they're going to be doing within March, okay? It depends what they're going to be doing in March. Okay, if they're going to continue to do, which right now looks like they're going to do a 25 as well. If they're going to continue to do 25 basis point rate hikes throughout the course of this year, that's going to add up. Okay, so we do just have to be very, very aware of that as well. If they're going to continue to do 25 basis point rate hikes, it's not going to be good for the markets at all. So you've got to be aware of that. Having a decreased increase is still bad personally, okay? And I'm sure Ben would agree with me as well. So, got to be aware of that. Tomorrow, I think, coming into it, we're going to pump, but initially, I think we're going to dump. However, I could be wrong. We could see the markets pump because of this, but initially, I still think this is a bad thing in the longer term. But how, how the market reacts tomorrow is going to be really, really good, okay? This is the first FOMC meeting this year. Okay, 2023. This is the first FOMC meeting. They're going to be publishing a 25 basis point rate hike. Okay, they're most likely going to be publishing a 25 basis point rate hike for the most of the year. If they do that, then tomorrow is going to be really, really helpful because it's going to show us how the market is going to react to this 25 basis point rate hike. Because right now, we don't know. Okay, right now, we could see how I feel is that the market's going to pump and then dump, but we could actually just see the market pump. Okay, that's a possibility as well. And also, we could just see the market dump. We don't know how it's really going to affect the markets yet. We did have a really good understanding of how it was going to affect them, how it affected the markets last year, okay, because we had a few, okay, and then we understood what the market did after these interest rate decisions came out. The majority of the time they would increase, the price would increase, and then we would see a dump shortly after. Okay, and this is what I'm still expecting because the smart people, the smart money, are going to be looking at this and thinking, this is not a good thing. Okay, this is not a good thing that they're still increasing the rates. Okay, it's really not good at all. So for me, I'm swaying the way that we're going to pump and then dump. But of course, we don't know. And tomorrow's going to be a big day because, as I said, it's going to give us an understanding for the rest of the year as well. It's going to give us an understanding of how the market's going to react to these Fed interest rate increases. These rate increases. But that's pretty much all I've got for you today. Just be very careful tomorrow. probably a lot of volatility is going to come in. We're not seeing too much volatility right now, but tomorrow we'll probably see some big volatility. I was looking to trade this as well, but not enough confluence there for me to enter a long position. Plus, tomorrow is going to be a big day. As I said, this is the first. This is the first base. This is the first FOMC meeting this year, and we're going to have to see how the markets react to that as well. So tomorrow I will come live on the normal time, and then I'll probably come live later as well for the FOMC meeting and just see how the market reacts to that. So if you enjoyed, please make sure you smash a like on this video, and I will see you tomorrow for the next live stream. If you enjoyed, and if you are new, please subscribe, turn that bell notification on so you never miss a live stream. Make sure you smash that like button as well. Thank you very much for watching, and see you later, guys.